Hi there and welcome back. Look, I'd really love it if you like what we're doing here and the information we're sharing. If you could go to the YouTube channel and press subscribe, it'd be greatly appreciated. Well, this morning, while we're apparently out of lockdown in Melbourne, it's a bit too cold to be outside, but hopefully next week we're giving you an update from somewhere far more exotic like an office or somewhere in the city. This week I wanted to do a bit of a weekly wrap. I actually talked about this as a possible case in about September last year, and I feel it's really interesting in talking about how we use life insurance contracts to solve real business problems. So the story is here we have two brothers. One owns about 70% of the business, the other one owns about 30% of the business. And what they've done is ultimately they've purchased the business they've been working in off the retiring owner under what's called vendor terms. So effectively the owner's financing the purchase and they're paying him back over time. What they actually had to do here is there's a few tranches to the story. Is that so we have vendor terms. We have two brothers that have bought a business. That business, or their shares in that business, I should say, are owned by their respective family trusts. They've got the vendor terms on their right hand that they're paying out over time, and equally they also had to borrow money from their mother and father to buy into the business as well. So they have a debt to their mum and dad. I guess the question is who owns that debt? Do they own that debt, or do their family trusts who bought into the business own that debt? And therefore, the first question is, upon either their death or disability, what's the entity that has to pay that debt out? Then we have the vendor terms. And again, upon their death or disability, what's the entity that has to pay that out? And then lastly, sitting behind all of that, is we have these two individuals and their families who, as we said, own this business. So what the outcome they were looking to achieve is, in the event of either of these two new business owners either passing away or becoming disabled, the outcome they were looking to achieve was to pay the total debt back to mum and dad that was used to purchase the business. It was to pay their portion of the vendor financing terms, and ultimately have the position so that their family would receive cash in exchange for their shares in the business, so the other family would continue to run the business. Sounds pretty simple, doesn't it? Well, what we've got here in reality is that we've got all these different needs going around and making sure that this gets to the right place at the right time. And sitting behind all of this is what we call a buy-sell agreement and a shareholders agreement, which actually lawyers, and we work hand in hand with the lawyers to get those drafted up. So we've gone through the process here, and obviously identifying the real tangibles like the debt and also the vendor financing terms are easy. As the business has just been sold, actually valuing the business was pretty easy because it's just been valued through the transaction of selling. So we worked with the accountant. We actually had to help the client go and engage a lawyer as well to work through drafting up those documents. And when you start to work through that, you work out, okay, well, who owns the debt to mum and dad? Well, in this case, it was actually the family trust that owned that debt to mum and dad. So ensuring a funding mechanism came in place, we had the family trust own it. Then we had the vendor finance terms and who owed those. And that was different again, and probably a different podcast, to be honest, a vidcast, sorry, around all of that. Then we had the buy-sell mechanism and who owned that. So ultimately we had three different policies doing three different purposes, actually owned by three different entities. But the ribbon tied on the top was this beautiful drafted buy-sell and shareholders agreement. And what that's meant and ensured is that in the event of either of these two gentlemen passing away prematurely or becoming totally and permanently disabled, they'll be able to pay their mum and dad back, settle their vendor terms, get the fair cash value for their business back to their family in exchange of the shares, and the business will continue to move forward, employ about 20 people, and therefore make a far larger impact on the community as well. I'd love to have a chat to anyone around anything to do with business succession and helping business owners work through these events. If you're a lawyer or an accountant or a business owner, I'd love to hear from you. Please feel free to reach out. Take care.